Hey, Greg Silva here. This is part two of our meeting on financial self-defense. Last week we went over 5 reasons schools lose money, and I'll just go over real fast without going into details. One was either bad accounting or slow accounting, really not knowing what your income is, even what your gross is or what your expenses are, because you're giving things to an accountant. The accountant's slow about doing that. Maybe you did a couple of expenses. All of a sudden you think you have money in the account, but you don't have money in your account because your accountant just has failed to enter those expenses on time. So you have to make sure you have great accounting. Next thing we talked about was combined bank accounts. When you're in business, you have a business bank account, and then you should have a personal bank account. Too many school owners just have one, and that can be very dangerous. We're going to talk today about a liability through your corporation. Same time, you want to make sure that you have money to run your home budget. At the same time, you have to make sure that you have bank accounts and money to run your school and have that extra money just in case unexpected expenses come up, or paid in full contingency liability, that if some of your paid in fulls came, they're moving out of state, they want their money back, you have to make sure you have savings for that. Poor pricing. Some people price their prices too low, and you're not bringing the income they need to succeed in business. Or they're priced way too high, and they're just not getting as many new students as they should, or keeping as many students. So you have to make sure you understand your demographics, understand what the market's going to bring into you, and price your programs accordingly. Again, these aren't the details. I went over the details in part 1, and you can access part 1 on the Rainmaker Business Solution page. Number 3 was non-existent investing. So some school owners get going and they just don't invest or reinvest in their school. So they're not reinvesting in fixtures or equipment. They're not investing in their education. They're not investing in hiring new staff members. So non-existent investing, especially in marketing, seems to be one we get started with. And then after things get going, we have non-existent investing in marketing. And this is where we need to get more students. When your school first starts off, you don't need a lot of students to start seeing growth. But as it gets bigger, because of attrition, we have to make sure we invest back into marketing and buy or sell some students and recruit some students. And the last is just poor line presence. Trying to skimp on money online, so we have a very poor presence on social media and in the websites. Now, that was talking about business. We're getting more into combining business and your personal savings. So today we're going to talk about financial self-defense. Number 1 is our expenses must be in line. Now, if you review last week's presentation, I talked about percentages of your gross that should be dedicated towards your school, your rent, the taxes you're paying on that business, your triple cam, whatever's in there, you have to make sure those things are in line. Your payroll should just be a certain percentage of your total gross, and that's including your payroll. Certain amount of expenses should be going to marketing. Certain expenses should be going into expenses and accounting. So again, those are breaking down, but we have to make sure our expenses in line. The only expenses we really have total control over that are ones that are non-fixed. So for instance, if you're buying supplies, paper products, things for your bathroom, that's an expense that you have control over. It doesn't have to be the same every month. You can shop around, you can buy ahead, you can be looking for sales so you can control those expenses. If you're working with insurance for your school, a lot of times you can negotiate a better deal. So you want to make sure your expenses are in line. If you're spending 60% on payroll, that's probably out of line. There should be probably more going into savings. But again, review part 1 of financial self-defense for all those percentages. Next is pay yourself. I'm surprised how many school owners that have small or medium schools tell me, I can't remember the last time I got paid. But again, I see them driving a car. they live in a house, or they're renting a condo. So I know there is some type of pay going on, but really they're just taking what's left over, or they're paying their personal expenses out of their business. So when it comes to going to lunch or dinner, they're pulling out their credit card for their school. They're paying for their car payments and things like that through their school. When all of a sudden they need some new clothes, if they don't have any money in their personal account, they're taking out the school credit card. It's really important that you budget everything for your school. That's its own entity. Then your personal life, that's its own entity. So you have to make sure that you're paying yourself, you deposit that money into your personal account. So much is going into savings, and everything else is either budget for your home, your entertainment, whatever you're going to do in your budget. So number 2 on this is to pay yourself. That's hard for some people, but if you look at the schedule, and 30 to 35% of your gross should be going towards payroll, you have your payroll and you have employees' payroll. You should pay yourself depending on type of the organization you have. In other words, if it's a corporation, it's a partnership, you just own it outright, is depending on how you're going to pay yourself. And we're going to get into that later on. But it's really important that you separate your business accounts. Again, that's its own entity, and your personal account, and you don't want to cross those back and forth. We want to make sure we keep our liabilities in check. Liabilities, what I'm talking about here, is if something goes wrong and someone goes to sue your business, we want to make sure your business, again, is separated from yourself. Especially if you've been working for quite a few years, you've been saving some money, all of a sudden you have you're a proprietor, and it's just your business. You don't have a corporate shield. Someone goes to sue you. They see the school doesn't have a lot of money, but you have personal income. You have a house. You have a boat, things like that. You don't want to be able to lose all those things. So we want to make sure you set up your school as some type of corporation. This could be, most common is a limited liability corporation, or LLC. You may want to talk to your accountant. You may want to take the tax benefit of a sub-S corporation, but it's usually one of those two. Now, when you set up a corporation, now you have what's called a corporate shield. If your school's a corporation, someone gets injured in your school, something happens, the person goes to sue you, they can sue you for the assets of the corporation, but they can't go and sue you personally unless you're using money from the corporation to pay personal bills. And then a good lawyer is going to say they broke the corporate shield. It's not really a corporation. They're serving that as a corporation, but they're taking the corporate funds and they're paying their personal bills out of that, and they're taking personal money and putting back into the corporation. So they're trying to trick us. It's not really its own entity. It's a personal business, and now they're going to be able to break that corporate shield. Once they break that corporate shield, now they can go after you personally. Also want to make sure you have business liability insurance. That's another level of protection. This way, if a student gets hurt and all of a sudden they say that you're liable for that, you have insurance through one of the martial arts organizations to make sure that you're shielded that way too, through liability. You want to make sure you have auto insurance. You have to make sure you have workers' comp insurance. I've seen a lot of schools go under because they're paying employees, but they don't have workman's comp. Their employee gets hurt. They're doing a spinning hook kick. They slip. They throw their knee out. They hurt their back. They go into the hospital. They rack up $50,000 of hospital bills. They ask you for your workman's comp. You tell them, I don't have workman's comp. And now they're going after your school and probably you. So you want to make sure you have workman's comp. Also want to make sure you have auto insurance. I've seen schools get in trouble for this. They have a car, and it's a business car. And then all of a sudden they ask one of their employees, they go, hey, I'm really busy right now. Can you do me a favor? Can you go to Subway and get me a sub? All of a sudden the student gets in the car. All of a sudden it gets in an accident. It's registered to your school. You don't have the proper insurance. Now they're suing your school and probably yourself at the same time because it wasn't insured properly, probably using personal insurance. So these are all insurances that you want to have in place, again, to protect your assets. Next thing you want to do is make sure you pay your taxes. If you're paying yourself and you're not taking out taxes, then you should be doing a quarterly estimate tax. So the quarterly estimate tax is saying, I expect to make this much money over the next 3 months. I'm going to pay that tax. Then at the end of the year, when you're doing income taxes, the money is in the IRS because you've been paying quarterly taxes. Or when you're paying yourself, make sure you're paying your taxes weekly. Most school owners do a combination of both. If they're a sub-S corporation or they're an LLC, they take a salary, and then they'll also take a corporate distribution. Now, why would they take both? Well, if you're taking a salary, you're paying for Social Security twice. You're taking the money out of your pay, and the school has to match the Social Security. If you're taking a distribution, you're only taking the FICA or the Social Security out one time. So a lot of school owners want to do half through payroll and maybe half through a distribution. But at the same time, you do have to make sure you pay your taxes. I've seen people think, okay, I'm just going to put it off. I'll just make sure I save towards the end of the year. When the end of the year comes, I'll have enough money to pay taxes. But they don't. And now they're running late on their taxes. IRS gets very, very picky about that you don't pay your payroll taxes, and the fines are very, very aggressive. So for your protection, it's really important, again, pay yourself, make sure you pay your taxes. It's either coming out of your weekly salary or you're doing as a quarterly prepayment. Make sure you save some money. Part of the percentages that I was talking about last week, percentages that come out of your gross, are business savings. You want to make sure that you always have extra money in your business, just in case something happens. You know, the air conditioner on your store goes out. Well, in most leases, the air conditioner is not covered in the lease. In other words, the landlord's not going to guarantee the air conditioner. He's going to guarantee that it's working when you took it over, and he wants it working when you give up your lease. But if something happens to that air conditioner, that could be a big expense. I mean, you could be talking $5,000, $10,000, $15,000. You have to be ready for things like that. If you take paid in fulls, and all of a sudden someone paid you in full, and all of a sudden they get in an accident, they become disabled, doctor says they can never take martial arts again, well, you're going to be refunding that money. You have to make sure you have that money. They paid you in full, but at the same time, they plan on taking all those lessons. Now, if they just decide that they want to take a break, that's one thing. If they become disabled, or if they get transferred, and all of a sudden the business gets transferred to another state, you're going to be returning that money. So it's really important that you have a savings account for your business. At the same time, we're talking about those two entities. What's happening in your business and what's happening on your personal life. It's important that you have personal savings. If you're just getting started, or maybe you're struggling a little with your finances, I would suggest taking a course on finances. Dave Ramsey has a lot of good courses. I highly recommend him. He's helped out a lot of people. But he's going to tell you that first thing you want to do is have an emergency fund. So if something happens, all of a sudden, and this happened a few years ago, a tornado came through and ruined one school. He's out of business. It's going to be a while before he can start teaching and making money again. So he has to have some type of personal savings. Even though he doesn't have his school, he still has rent or mortgage on his house. He's got his car payments. He's got to have food on his table. So it's really important that you have an emergency fund. And if you're doing the Dave Ramsey course, he's going to suggest that you have 3 months to 6 months of income in savings. Next thing he's going to tell you is not to have any credit card debt. And then after you don't have any credit card debt, he's going to start having you save for retirement. But those are savings accounts that you must have. Next thing is avoid debt. All of a sudden, if something happens to your school and you get really excited because they have a different type of mat or something like that, and you put $20,000 on your credit card, that's hard debt to come out of. When talking about a credit card that may have 20 to 25% interest, you don't want to do that. Get used to paying things off monthly. If you need a credit card, get an Amex card. An Amex card tied into a SkyMiles account. If you have it tied into SkyMiles account, now you're paying off your debt monthly to American Express. You're getting SkyMiles. I have a friend, Diego Perez, down in Miami. He pays everything through his Amex card, and he pays off his Amex card at the end of the month. He flies just about anywhere he wants. He racks up a ton of miles. Okay, next, personal financial self-defense. Have some type of estate planning. If you're young, as most school owners, and you're probably pretty healthy, you don't plan on going anywhere, but stuff does happen. Make sure you protect your family. Talk to some people. I'm not going to do a type of will or anything like that. I'm young, and I think it's kind of weird if I have a will at age of 40 years old. I shouldn't be doing that. Well, if you have a family, you want to make sure your family's protected. You don't want to have your money go into some type of escrow account or something like that where they're trying to figure it out. Protect your family. Make sure you do your estate planning. Make sure you have plenty of life insurance. If something happens to you, you have a wife and child, you want to make sure they're taken care of. They may not be able to run your martial arts school as good as you could run your martial arts school. So you want to make sure that they have a lifelong income. If something happens to your wife, you say, okay, well, I'm the main income person for the family. So if my wife happens, I'm pretty good. Don't do that. Make sure she has plenty of insurance. If something happens to her and you have to hire someone to take care of your family and things like that, you want to make sure you're all right and you're not really stretched out. So be generous on your life insurance. If you take out a life insurance policy and it's a term policy, it's probably going to be less than $100 a month for $2 million of life insurance. So I would do at least $2, if not $4 million in both you and your wife. We talked about this before, making sure we have emergency savings. We also want to make sure we have another account for retirement. And you want to start your retirement as soon as possible. And you would like to start a tax-deferred savings plan as soon as possible. I'm not going to recommend anything. I'm going to tell you to talk to your accountant, have him recommending something. You know your financial situation better. But there's an awful lot of Americans, when they get to retirement age and all of a sudden they don't have their business, or since they're no longer in and working into business, they're paying a lot of expenses on payroll, they need money. Social Security is not going to do it. I just started Social Security payments last year. I think I get $2,200 a month. That's not very much money. Luckily, I don't have to live on my Social Security that I started early with the retirement savings plan. And you also have to have some type of savings for fun. So if you want to take a vacation, or all of a sudden you want to buy something, a new car, all of a sudden your kids want to go to summer camp, that you have that fun savings plan. So savings is really important. I think Americans are just addicted to their credit cards. Try not to use your credit cards. Again, credit card debt is really, really tough to come out of. And all of a sudden you're paying off your debt and you say, man, I bought this, made that car, this, I no longer have it, but I'm still paying on it. Make sure you have home insurance. So if something happens at your house and they sue you personally, you want to make sure you have home insurance. Not only home insurance for liability, but home insurance in case of a flood, hurricane, wind damage. If you have a lot of equity, you may also want to think about an umbrella policy. An umbrella policy covers you for just about anything. I have an umbrella policy because I have a Great Dane. If I'm walking my Great Dane and he happens to bump into a kid or something like that, someone gets hurt, I don't care what it is, I want to make sure I have plenty of insurance. One thing I learned about when shopping for an umbrella policy, they're very, very inexpensive. I think a $4 million policy could be $40 per month. It's very inexpensive. And you may say to yourself, well, I don't have a lot of assets. I'm not worried about that. Well, if you don't have a lot of assets, a smart attorney is going to do this. He goes, well, this guy's 30 years old. He's making $100,000 a year. He has 35 more years to work. That's $3.5 million that he's going to make over the next 35 years. We're going to show him not only what he has now, but everything he's going to make in the future. And they have a court case against you for $3.5 million a year. Go, what? I've got $10,000 in my bank account. Oh, one reason that you have an umbrella policy. Just in case, worst case scenario, something happens, you're covered. You may even think about this. I know this is one thing that I had when I first started out my school. I made sure that I had a warranty policy on my home. So if my air conditioner went out on me, I had an insurance policy. If my refrigerator stopped working, I got a warranty insurance policy. There's a lot of companies out there. You may be spending $40 per month, but you don't have to worry so much about having a big expense. All of a sudden, your fuse box burns out, and someone comes in and says it's $5,000 to repair. Well, you don't have to worry about it because you have that home warranty policy. So these are all policies that, since you probably haven't saved a lot of money, you want to make sure you protect your assets. You don't want to be spending things unnecessarily. So these are all good insurance policies to consider. Now, if you start getting a little bit older and you have $3 million in the bank and you're not worried about your refrigerator going out, I totally understand. You got a few $1 million in the bank, you don't have to worry about having life insurance on yourself. When you're first getting out and you're first getting started and you haven't saved a lot, you want to make sure you protect everything you have. So this is part 2. Again, you can go over the recording and put the recording online. We started off with expenses in your business. We talked about paying yourself. We talked about keeping your liabilities in check with a corporate shield. We talked about the importance of paying taxes. We talked about the importance of staying out of debt. Estate planning in case something happens to you. Life insurance just in case, again, something tragic happens to you or your wife. Having emergency funds, retirement funds, and savings for fun and things that are gone. I mean, a lot of things are happening that you want to enjoy, but it's really important that we stay financially responsible. That's one reason that I really recommend a program like Dave Ramsey's. I know I look on Facebook and I see people that have small or medium schools. I think it's great that you're out driving the Corvette and you've got a boat and you're doing camping trips and things like that. But at the same time, there's opportunities to use that money in a different way. I had a client recently buy a Corvette. He loves his Corvette. I think that's great. He's wanted a Corvette. Now he's like 40 years old. He bought one and spent $35,000 cash for it. Well, that's great. $35,000 with interest over 25 years would have been a lot of money that he may hope that he saved a little bit differently. That Corvette is fun now. It's probably going to be fun for another 12 months until he gets bored with it, and that money can be used for a different way. So not only think of the cost of $35,000 of the Corvette, but the missed opportunities. The missed opportunities is probably the $150,000 or $200,000 that he could have had if he invested that in different types of stocks or retirement plans. He could have had $200,000 instead of just that 12 months fun with the Corvette. So just something to think about. I'll be back next week for the final segment in part 3. Thank you.